Question 1. Which of the following is the primary purpose of underwriting in insurance? A. To determine the premium rate for policies based on risk classification. B. To ensure that policies are sold without discrimination. C. To decide whether to accept or reject insurance applications based on risk assessment. D. To create new insurance products for the market. Answer: C. To decide whether to accept or reject insurance applications based on risk assessment. Explanation: Underwriting serves as the process through which an underwriter evaluates the risks associated with an insurance application. This evaluation helps to determine whether the risk is acceptable or if adjustments such as higher premiums or exclusions need to be applied. Risk assessment is the key component of underwriting, as underwriters review such as the applicant's health, occupation, and lifestyle to assess the level of risk they present. The decision-making process aims to avoid adverse selection where high-risk individuals disproportionately apply for coverage and ensure that insurance companies remain financially viable. Question 2. Scenario: Mr. Thomas has applied for a life insurance policy, but he has a significant history of high blood pressure. After reviewing the application and medical history, the underwriter assesses that this is a higher than average risk but still insurable. What would be the most likely course of action for the underwriter? A. Approve the policy without any changes, since high blood pressure is not a serious condition. B. Deny the application, as high blood pressure is an automatic disqualification. C. Approve the policy with a higher premium or offer exclusions based on the medical condition. D. Refer the application to another underwriter for a second opinion. Answer: C. Approve the policy with a higher premium or offer exclusions based on the medical condition. Explanation: Underwriters assess applicants' risks based on various factors, including medical conditions. In the case of a pre-existing condition like high blood pressure, the applicant is not automatically disqualified but may be subject to higher premiums or specific exclusions related to the condition. Underwriters apply risk-based pricing to balance the financial risk posed by ensuring the applicant, ensuring that the premium reflects the higher risk of claims due to the condition. This helps maintain profitability while still offering coverage to applicants with manageable risks. Question 3. Which of the following best describes the concept of moral hazard in insurance underwriting? A. The tendency of individuals to take fewer precautions against risks once they are insured. B. The increased risk that a policyholder may face after receiving a high-value payout. C. The practice of selecting individuals with favorable risk profiles for underwriting. D. The illegal practice of inflating claims to receive a higher payout. Answer: A. The tendency of individuals to take fewer precautions against risks once they are insured. Explanation: Moral hazard refers to the situation where the behavior of the insured changes because they no longer bear the full consequences of their actions due to having insurance coverage. In other words, after purchasing insurance, individuals may engage in riskier behavior, knowing that the insurer will cover the financial costs of any resulting damages. Pluses: Underwriters assess moral hazards by considering the applicant's potential for such behavior, which can influence the underwriting decision, particularly in areas like property and health insurance. Question 4. What is the primary reason that underwriters use risk classification systems in property insurance? A. To identify the most profitable clients and offer them exclusive deals. B. To allocate insurance coverage based on the client's risk tolerance. C. To group policyholders into categories based on the level of risk they pose. D. To avoid offering policies to individuals with higher than average risks. Answer: C. To group policyholders into categories based on the level of risk they pose. Explanation: Risk classification is a method used by underwriters to categorize policyholders into different groups based on their level of risk. In property insurance, this involves evaluating factors such as the condition of the property, its location, and its history of claims. The goal is to group clients with similar risk profiles, which helps determine appropriate premium rates and coverage limits. By properly classifying risk, underwriters can ensure that the insurer maintains profitability while providing fair coverage based on each client's risk exposure. Question 5 scenario: Sarah applies for health insurance but has a history of diabetes. During the underwriting process, the underwriter identifies Sarah as a high risk due to her pre-existing condition. What is the most likely outcome of this underwriting decision? A. The application will be rejected outright due to her condition. B. The policy will be approved with a higher premium or exclusions for diabetes-related issues. C. The underwriter will automatically offer Sarah a policy with the lowest available premium. The Sarah will be required to undergo further medical tests before the underwriting decision can be made. Answer: B. The policy will be approved with a higher premium or exclusions for diabetes-related issues. Explanation: in health insurance, a history of chronic conditions like diabetes does not necessarily result in the rejection of an application, but it does often lead to higher premiums or specific exclusions related to the condition. This is because diabetes is associated with an increased risk of medical expenses. The underwriter may adjust terms of the policy to reflect this higher risk, ensuring the insurer is compensated accordingly through high premiums or limiting coverage related to diabetes. Question 6. Which of the following factors is typically not considered when evaluating risk for health insurance underwriting? A. Pre-existing medical conditions. B. Family medical history. C. Applicant's credit score. D. Age and lifestyle habits. Answer: C. Applicant's credit score. Explanation: in health insurance underwriting, factors like pre-existing medical conditions, family medical history, age, and lifestyle habits, such as smoking or exercise, are considered as they all impact the likelihood of the applicant needing medical care. However, an applicant's credit score is not typically used to assess risk in health insurance underwriting, as health insurance is more focused on health-related factors than on an individual's financial history. This distinguishes health underwriting from other types, such as life insurance, where financial risk factors may be more relevant. Question 7. What does the term adverse selection mean in the context of insurance underwriting? A. The practice of offering policies at a premium rate that is too high for high-risk individuals. B. The tendency of individuals with higher than average risk to seek insurance coverage. C. The underwriting process of determining risk based on historical data. D. The adjustment of premiums based on external market conditions. Answer: B. The tendency of individuals with higher than average risk to seek insurance coverage. Explanation: adverse selection occurs when individuals who are at a higher risk of needing insurance coverage are more likely to apply for insurance policies. This leads to a disproportionate number of high-risk individuals being insured compared to low-risk individuals, potentially causing the insurer to face greater financial losses. To prevent adverse underwriters use various risk assessment techniques and may impose higher premiums for high-risk individuals or even deny coverage if the risk is too high. The goal is to maintain a balanced risk pool, which helps ensure the financial stability of the insurance company. Question 8. Scenario: Mr. Harris owns a commercial building located in a high-risk flood zone. When applying for property insurance, the underwriter evaluates the risks associated with this location. What action is most likely to be taken by the underwriter? A. The insurance policy will be denied due to the flood risk. B. A standard premium will be charged without considering the flood risk. C. A higher premium will be applied to account for the increased flood risk. D. The underwriter will offer a policy with full coverage for flood damage. Answer: C. A higher premium will be applied to account for the increased flood risk. Explanation: in property insurance, the location of the property plays a significant role in the underwriting process. For properties in high-risk areas such as flood zones, underwriters assess the potential for damage due to natural disasters. While the policy is unlikely to be denied, the insurer will typically apply a higher premium to reflect the increased risk of flood damage. Adjustment ensures that the insurer is adequately compensated for the added risk of loss and can maintain profitability in the event of a claim. Question 9. What is the primary function of underwriting software and databases in the insurance industry? A. To process insurance claims faster. B. To assist underwriters in assessing risks and making informed decisions. C. To calculate the amount of coverage for policyholders. D. To ensure the customers receive the lowest possible premium rates. Answer: B. To assist underwriters in assessing risks and making informed decisions. Explanation: underwriting software and databases are essential tools used by underwriters to streamline the risk assessment process. These tools allow underwriters to quickly access historical data, medical records, financial information, and risk classification systems, which help them make more informed and accurate decisions about whether to approve or reject an application. Using technology, underwriters can reduce human error, increase efficiency, and make more consistent decisions. These systems may also provide predictive analytics to better assess potential risks. Question 10. Which of the following is an example of A high risk factor that might lead to higher premiums in casualty insurance underwriting. A history of multiple workplace injuries. B. A long-term, stable financial record. C. A vehicle with advanced safety features. D. A residence in a low-crime neighborhood. Answer A. A history of multiple workplace injuries. Explanation: in casualty insurance, the risk of liability or injury is a key factor in underwriting. A history of multiple workplace injuries indicates a higher likelihood of future claims, which makes the applicant a higher risk for the insurer. As a result, the underwriter is likely to adjust the premiums upward to compensate for the increased risk of claims. Other factors such as a stable financial record or a safe vehicle would generally lower the perceived risk and might result in lower premiums. Question 11 scenario. A homeowner has applied for property insurance but fails to disclose a previous fire claim. The underwriter later discovers this during the policy review. What is the most likely consequence of this omission? A. The policy will be immediately cancelled. B. The homeowner will be asked to pay a higher premium. C. The claim will be paid, but only for part of the damage. D. The homeowner will be penalized with a suspension of coverage. Answer A. The policy will be immediately cancelled. Explanation: failure to disclose material facts such as a previous fire claim can be considered fraudulent. If the omission is discovered, the insurer may cancel the policy for misrepresentation, as this violates the principle of full disclosure during the underwriting process. Question 12. What is the primary purpose of using reinsurance in property insurance? A. To increase the amount of money available for marketing. B. To protect the insurer from large losses by transferring risk to another company. C. To lower premiums for policyholders. D. To ensure that claims are paid out more quickly. Answer B. To protect the insurer from large losses by transferring risk to another company. Explanation: reinsurance is the practice of insurers transferring a portion of their risk to another insurer, the reinsurer. This helps mitigate the potential financial impact of large or catastrophic losses, such as natural disasters, and ensures the insurer can remain financially stable. It is not used to directly lower premiums for policyholders, but indirectly help by maintaining the insurer's financial health. Question 13. What is the primary distinction between the claims-made and occurrence policies in casualty insurance? A. Claims-made policies only cover claims made during the policy period, regardless of when the incident occurred. B. Occurrence policies only cover claims made during the policy period, regardless of when the incident occurred. C. Claims-made policies provide coverage for incidents that occur during the policy period, regardless of when the claim is made. D. Occurrence policies provide coverage for claims made after the policy period ends. Answer A. Claims-made policies only cover claims made during the policy period, regardless of when the incident occurred. Explanation: a claims-made policy provides coverage for claims made during the policy period, regardless of when the incident that caused the claim actually occurred. In contrast, an occurrence policy covers incidents that happened during the policy period, even if the claim is made after the policy period ends. Question 14. Which of the following is a characteristic of a subrogation clause in an insurance contract? A. It allows the insurer to refuse a claim if the policyholder has a pre-existing condition. B. It permits the insurer to seek reimbursement from a third party responsible for the loss. C. It allows the insurer to reduce the payout amount based on the policyholder's actions. D. It prevents the policyholder from filing a claim with any other insurance company. Answer B. It permits the insurer to seek reimbursement from a third party responsible for the loss. Explanation: subrogation is a process by which an insurer, after paying a claim to the policyholder, has the right to recover the amount paid from a third party who is deemed responsible for the loss. This helps the insurer recoup costs and reduces the financial impact on the insurer. Question 15. What does the term moral hazard refer to in insurance underwriting? A. The risk of loss due to environmental factors like floods or earthquakes. B. The risk of loss caused by the intentional actions of the policyholder. C. The risk of loss due to poor management decisions by the insurer. D. The risk of loss due to unpredictable external events. Answer B. The risk of loss caused by the intentional actions of the policyholder. Explanation: moral hazard refers to the increased risk of loss that arises when individuals or organizations behave differently because they know they are protected by insurance. For example, if a policyholder intentionally causes damage to their property knowing they are covered, that would be considered moral hazard. Question 16. What is the purpose of a deductible in an insurance policy? A. To limit the insurer's liability for certain types of claims. B. To reduce the policyholder's premium payments by lowering the insurer's risk exposure. C. To specify the maximum amount the insurer will pay for claim. D. To provide additional coverage for high-risk policyholders. Answer: B. To reduce the policyholder's premium payments by lowering the insurer's risk exposure. Explanation: deductible is the amount policyholder must pay out of pocket before the insurer will cover the remaining costs of claim. It helps lower the insurer's risk exposure and allows policyholders to reduce their premium payments in exchange for higher potential cost in the event of claim. Question 17. What is an exclusion in an insurance policy? A. A provision that prevents the insurer from cancelling a policy. B. A list of circumstances or events not covered by the insurance policy. C. A clause that requires the insurer to pay for damages to third parties. D. A provision that allows the insurer to offer a discount to low-risk policyholders. Answer: B. A list of circumstances or events not covered by the insurance policy. Explanation: exclusions are specific situations, conditions, or types of damage that are not covered by the insurance policy. They are outlined in the policy and help define the scope of coverage. Common exclusions include damage from floods, earthquakes, or intentional acts by the policyholder. Question 18. Which type of insurance policy provides coverage for legal liability arising from injuries or property damage caused by the policyholder's actions? A. Health insurance. B. Life insurance. C. Liability insurance. D. Disability insurance. Answer: C. Liability insurance. Explanation: liability insurance provides coverage for legal claims arising from injuries or property damage that the policyholder causes to others. It helps cover legal defense costs and any settlements or judgments if the policyholder is found legally responsible for the damages. Question 19. Which of the following best describes underwriting guidelines in the context of insurance? A. They are the laws that determine the maximum amount of coverage an insurer can offer. B. They are the set of criteria used by underwriters to assess the risk and determine appropriate premiums. C. They are the regulations that govern the overall pricing of insurance premiums. D. They are customer preferences for types of coverage available in the market. Answer: B. They are the set of criteria used by underwriters to assess the risk and determine appropriate premiums. Explanation: underwriting guidelines are the criteria and standards used by underwriters to evaluate the risk associated with a potential policyholder. These guidelines help determine whether an application should be approved, what the appropriate coverage should be, and what premium rates should be charged based on the applicant's risk profile. Question 20 scenario. A policyholder submits a claim for damage caused by a windstorm. The insurer investigates and finds that the damage was actually caused by poor maintenance of the property. What is the most likely outcome? A. The claim will be paid in full. B. The claim will be denied due to the lack of coverage for maintenance-related issues. C. The claim will be paid, but only for a partial amount due to maintenance negligence. D. The insurer will offer to pay for the repair costs, but only for wind-related damage. Answer: B. The claim will be denied due to the lack of coverage for maintenance-related issues. Explanation: insurance policies typically cover damage caused by covered perils, such as windstorms, but they do not cover damage resulting from neglect or poor maintenance. Since the damage was caused by maintenance issues and not by the windstorm itself, the insurer is likely to deny the claim. Question 21. Which of the following is typically covered by a homeowner's insurance policy? A. Flood damage. B. Wear and tear from normal use. C. Fire damage. D. Damage caused by war or terrorism. Answer: C. Fire damage. Explanation: homeowners insurance generally covers damage caused by specific perils, including fire. However, it typically excludes coverage for flooding unless the homeowner has additional flood insurance and damage from wear and tear or acts of war. Question 22. What does claims frequency refer to in insurance underwriting? A. The total amount of money paid out in claims over a policy period. B. The number of claims filed by a policyholder during a specific time frame. C. The likelihood of a policyholder submitting a fraudulent claim. D. The speed at which claims are processed by the insurer. Answer: B. The number of claims filed by a policyholder during a specific time frame. Explanation: Claims frequency refers to the number of claims that are made by a policyholder or group of policyholders over a certain period. High claims frequency indicates higher risk, and underwriters may adjust premiums or policy terms accordingly to reflect this risk. Question 23. Which of the following best describes moral hazard in the context of insurance? A. The possibility that the insured will take on more risk because they have coverage. B. The risk that an insurer may go bankrupt after paying out too many claims. C. The hazard that a policyholder may cause damage to increase the payout from their policy. D. The hazard that an insurer will mistakenly deny a valid claim. Answer A. The possibility that the insured will take on more risk because they have coverage. Explanation. Moral hazard refers to the tendency of people to take on more risk when they know they are protected by insurance. For example, an insured driver may drive more recklessly because they know any damages will be covered by their policy. Question 24. What is the purpose of an excess insurance policy? A. To cover expenses that exceed the limits of the primary insurance policy. B. To provide basic coverage for low-risk individuals. C. To prevent the policyholder from needing to pay any premiums. D. To cover only the deductible amount in a policyholder's primary policy. Answer A. To cover expenses that exceed the limits of the primary insurance policy. Explanation. Excess insurance provides additional coverage above and beyond the limits of the primary insurance policy. It kicks in when the coverage under the primary policy is exhausted, helping to cover large claims or incidents. Question 25. Scenario. A business owner purchases business insurance but fails to properly secure valuable equipment. The equipment is stolen. What is the likely result of this situation? A. The claim will be paid in full despite the lack of proper security. B. The claim may be denied because the property was not properly secured. C. The claim will be paid partially but with a higher deductible due to negligence. D. The claim will be paid but only for the stolen equipment's market value. Answer B. The claim may be denied because the property was not properly secured. Explanation. Insurance policies often require policyholders to take reasonable steps to secure their property. Failing to do so may be considered negligence, and the insurer may deny the claim or reduce the payout based on the failure to secure the equipment properly. Question 26. What is the difference between actual cash value and replacement cost coverage in property insurance? A. Actual cash value covers the replacement cost minus depreciation. Replacement cost covers the full cost of replacing the item. B. Actual cash value covers the full replacement cost. Replacement cost covers the depreciation amount. C. Actual cash value is a broader form of coverage than replacement cost. D. Replacement cost insurance is available only for certain types of property, while actual cash value is available for property types. Answer A. Actual cash value covers the replacement cost minus depreciation. Replacement cost covers the full cost of replacing the item. Explanation. Actual cash value, SCV, accounts for depreciation, meaning the insurer pays the current value of the item after considering how much it has depreciated over time. Replacement cost coverage pays for the full cost to replace the item without factoring in depreciation, which is often an expensive option for the policyholder. Question 27. What is moral hazard in the context of insurance? A. The risk of policyholders deliberately causing damage to claim from their policy. B. The increased risk posed by policyholders living in high-crime areas. C. The uncertainty caused by natural disasters on the value of policies. D. The difficulty of predicting the total amount of claims during a policy period. Answer A. The risk of policyholders deliberately causing damage to claim from their policy. Explanation. Moral hazard is the risk that a policyholder may take advantage of their insurance by intentionally causing damage or failing to maintain their property to claim from their policy. This behavior can be prevented through the use of deductibles and other safeguards within the policy. Question 28. What is the primary function of an actuary in the insurance industry? A. To approve or deny insurance applications based on risk levels. B. To assess claims and determine payout amounts. C. To calculate premiums based on statistical risk data and trends. D. To advise policyholders on which insurance policies to purchase. Answer C. To calculate premiums based on statistical risk data and trends. Explanation. Actuaries use statistical models and data to assess the risk involved in providing insurance and help determine the appropriate premiums to charge. They play a critical role in ensuring that the insurer's pricing structure is both competitive and profitable. Question 29. Which of the following is typically covered under a standard homeowner's insurance policy? A. Earthquake damage. B. Damage from an intentional act by the policyholder. C. Damage caused by a falling tree during a storm. D. Damage caused by normal wear and tear. Answer: C. Damage caused by a falling tree during a storm. Explanation: homeowners insurance typically covers damage from perils such as storms, including the damage caused by a falling tree. However, earthquake damage, intentional acts by the policyholder, and damage from wear and tear are typically excluded or require separate coverage. Question 30. What is the main purpose of liability insurance in a personal auto policy? A. To cover medical expenses for the driver and passengers. B. To repair the vehicle in case of an accident. C. To protect the policyholder from financial responsibility if they are at fault in an accident. D. To provide rental car coverage while the vehicle is being repaired. Answer: C. To protect the policyholder from financial responsibility if they are at fault in an accident. Explanation: liability insurance in an auto policy protects the policyholder from financial responsibility if they are found at fault in an accident. It covers damages to property and injuries to others up to the limits specified in the policy.